Namaskar, this is Akhilesh Bhargava. Welcome to tit-bits on business and finance with me. As the world battles the severity of the corona crisis and even its coming back, as we saw in the case of Singapore, the world increasingly accuses China of not having told the truth about the corona crisis. The allegation is that China never told the true figures about how many got afflicted by it, how many recovered, and how many died, and in what regions did it really spread. These kind of figures being fabricated by China is nothing new, and that is something which its corporates also do on a large basis. It is popularly said that a Chinese company maintains three sets of books of accounts. One for the regulator in order to show that the company has complied with all the laws of the land. The second for the investors to show a rosy picture. And the third is for the managers who manage the company. And it is said that it is only the third set which shows the true picture about the company. But a Chinese company is said to maintain three books of accounts. It is because of this that when Chinese companies are listed abroad, when they raise money abroad, and they are required to share their accounting information and record with authorities abroad, that they refuse to do so. They just do not cooperate. They take the stand that under the Chinese law, it is illegal to share sensitive accounting information about a company with any authority or entity abroad. And thus, foreign authorities, even if they wish to investigate the books of accounts of a Chinese company, they are not able to do that. Rather, they are not allowed to do that. Thus, the financial statements which are prepared by Chinese companies are not containing the disclosure that they need to have, and they do not meet the parameters of being transparent. Apart from the financial statements being not very clear there, even the ownership status and pattern of a company, of a Chinese company, is very often not disclosed. It is kept opaque. A number of Chinese companies which are thought to be private are actually owned by the Communist Party of China and even by the People's Liberation Army. In this background, even the Chinese authorities do not cooperate with their counterparts in countries abroad whenever it comes to investigating any kind of a corporate fraud or crime is concerned. And thus, it is popularly said that the financial statements of Chinese companies are false and fabricated. And of course, in that, apart from the authorities, their auditors play a key role. The shocking part is that despite this kind of a criminal conduct by Chinese corporates, very clearly reflected in their financial statements which are false and fabricated, they managed to raise funds in stock markets abroad in a big way. In the US alone, there are over 200 listed Chinese companies who have raised capital on the US stock exchanges. These companies have had a market capitalization of over $1.5 trillion, even though at the moment 84% of them, their shares are trading below 50% of their issue price. But the fact is, with these kind of records, they yet manage to access capital markets abroad. Their entire scheme of raising money, if you ask us, is list, loot and scoot from the foreign markets, because after that, when they disclose financial statements which are found to be fraudulent, they do not get subjected to kind of action which is necessary by authorities in those territories where their shares are listed. And when a Chinese company, let's say, goes to America and raises funds, the reality is it's not just American investors who get looted, because in America you have many other countries who come and invest. Thus, Chinese corporates manage to raise funds from global investors on the basis of financial statements which are very often dubious and suspect. Thus, Chinese frauds committed by Chinese corporates keep surfacing with almost predictable regularity. And the latest one that surfaced in April 2020 is of a company called Luckin Coffee. Luckin Coffee claimed to be the alternate to Starbucks in China, and it was growing at a fast pace. But its business model was sell more and lose more. Growth, but no profits. That's because it was attracting customers on the basis of massive discounts, massive rebates, massive incentives, but it was not making any profits. It was just 2 years old, and despite that, in May last year, Luckin Coffee made an IPO on the Nasdaq exchange in New York. It raised $645 million in that IPO that it made. Imagine a 2-year-old loss-making company burning cash month after month managed to raise more than $500 million on the US markets. After the success of this listing, in another few months, it raised another $865 million from investors in America, thus raising over $1.5 billion in the process. It had marquee investors like BlackRock, Singapore sovereign funds, Louis Dreyfus, and a number of venture capitalists. And so much was the stock in demand that on the first day, its stock price went up. On the first day of its listing, its stock price went up by 20%. All seemed hunky-dory for this company till in February this year, Muddy Waters Research, a short seller in USA, came out with a research report. Muddy Waters said that in 2019, Luckin Coffee's revenues were largely fabricated. It said that most of the revenues that it reported were false and that the financial statements are completely fabricated. At that point of time, after the report came out in the open, in a short period of time, the market capitalization, the share price of Luckin Coffee on the Nasdaq Stock Exchange fell by over 80%. Now, at the moment, its trading has been suspended. And what is even found out is that the Chinese CEO and chairman of Luckin Coffee, they have sold their shares in the company completely and gone. They have no stake in the company. At the moment, SEC, the American equivalent of SEBI, and PCAOB, their accounting regulator, are investigating the entire affairs. And unlike most of the times in the past, this time, the Chinese authorities say that they will cooperate in the matter. To us, it's a clear case of a corporate crime. It's a clear case of a fraud and cheating. You have made financial statements which are utterly bogus. They show a picture which is completely wrong, and investors have been duped. In fact, out of this $1.5 billion which were raised, according to us, a large part of the money is going to be lost as far as the investors are concerned. This is the recent story of Luckin Coffee. But then, this is not the only one. These kind of cases of frauds committed by Chinese companies keep surfacing, as we said, with predictable regularity. Blatant frauds by Chinese companies listed on American stock exchanges is an old story. In fact, between 2010 to 2013, 175 Chinese companies listed on stock markets in US, they raised funds by way of what was called reverse merger, and they vanished. On this particular saga, a documentary was also made called The China Hustle. Basically, Chinese companies came, accessed the American markets, and after that they were gone. At the moment, apart from Luckin Coffee, the other companies of Chinese origin which have indulged in corporate frauds, fudging their financial statements, include a company called TAL Education. Yet another one is a company called Nobel Group from Hong Kong. Ikiyi, a company of the Baidu Group, which is an equivalent of Netflix, has also been accused of fudging its revenue figures. The others which are in circulation at the moment because of frauds committed by them, these Chinese companies are China Internet, NQ Mobile, and China Media. As we said, there are many others, but these are just the recent names. When you look at this entire scene, what comes across is that despite having such a culture of fraudulent financial statements, Chinese companies manage to enter the capital markets in US and gather big money, raise huge funds, and go back. We think it's a huge opportunity for India. And what is the opportunity? The opportunity for India is to ensure that corporate India prepares financial statements which are transparent. Transparent financial statements always earn the respect of investors, always earn the trust of investors, and that gives a lifeline to a corporate whenever it wants. When we talk about trying to attract companies to India from China, and when we talk that we need a proper ecosystem, according to us, this is one of the key elements in a proper ecosystem. Corporates which have financial statements which can be trusted, depended, because they are known to be transparent. If India wants foreign companies coming to India and it builds this as its USP, You will have them coming in large numbers because it will gain the trust of international investors and other corporates. According to us, here it is the corporate part of India, private sector, which has a huge role to play, and in ensuring that financial statements are transparent, dependable, and trustworthy. The key role that would be played, according to us, is the auditors for sure, independent directors, and finally regulators. In recent times, what we have noticed in India is that auditors, independent directors, and regulators have all let us down, such that India also today has got a huge culture of fraudulent financial statements. We think that in case India wants to convert this crisis into an opportunity and build an ecosystem, we will need to drive towards a situation where our financial statements are transparent and trustworthy. Let's learn from this Chinese experience. This is Akhilesh Bhargava signing off till we meet again. Namaskar.
Now be the first to know about the latest updates on our new news app. Go on your Android or iOS, search for HW News Network. Download our app, choose the language you prefer to get updates in, and be up to date with the latest news.
If you like this video, please share it, and we would love to hear your comments in the comments section down here. Also, please do like our Facebook page and follow us on Twitter to get minute-to-minute news updates. For more such shows and videos, subscribe to our YouTube channel.